All right, what's going on, everybody? How y'all did it? It feels like a Friday, huh? No? Maybe it's just me. Let me check to make sure the studio is working correctly, and then we'll get started. Someday today, there we go. Studio is working correctly, and then we'll get started. All right, all good. What's up, Scotty? How you doing? So we had a couple topic requests. Um, One of them I haven't quite figured out how to do yet. I mean, I got some ideas. I tested one out. I was sorely disappointed by the results. So earlier this week, I had showed a role using calls and how to manage a profitable calls trade, some different choices. But of course, when you go to roll an option, the broker that you use will radically alter what it shows you on the trade. The outcome is the same. I want to make sure everybody understands that. If you roll on Fidelity or Schwab or Tasty or whatever, you end up with the same trade. It's just that what they show you is going to be different. And so you have to understand what they're trying to tell you before you actually hit submit to understand what your new trade is going to be. Yeah, I'm a huge fan of futures, but I like to do all of it: futures, stock, options, everything. And when we're in the right environment, I do more of one than another. And that way, there's always something to nibble on, always, right? The government shutdown part is going to be kind of tricky because there's so many moving parts and it's different than how it's been before. This government shutdown is not just going to furlough people. They're talking about, permanent job loss. That's not normally how it goes, right? Normally they're back paid and they're still, quote, employed, although they're on, like a temporary unemployment. So it's going to be a completely different thing. And remember, jobs go to the heart of the Fed's dual mandate and the reason that they capitulated and started cutting in the first place. So it's kind of a really big deal. And it's so uniquely different. We just don't know what it's going to do. Plus, there's still this very strong backdrop of all this money coming into the market for AI and data centers and energy. So much energy is needed. It's like nonstop talk about energy, any energy at this point. Remember, there used to be snobs that were like, oh, I don't want solar. I don't want coal. I don't want this. I don't want that. Now they're just like, I don't care how you got the energy. Just give me some energy. We'll take any kind of energy you got. Get a hamster on a wheel running in a circle as long as they can get some energy out of it. So let's look at the request topics for today. As I said, one was a little easier to do than the other. We'll probably review the trade that I had discussed, which was the Intel trade. And then I'll fill you guys in on what I attempted to do to match this request. So I have an Intel call that I bought. It was the 30 strike. And I bought it when Intel was sitting at like $22 or $24. And so, of course, it's been doing pretty good because the stock went up nearly 50%, right? It went from 24 to 34. I think it got even higher than that. Sorry, I can't chew gum and walk, can't type and talk. But The trade's been doing good and it still has like 100 days left on it. And so I decided, well, let's manage the darn thing. So I made a video about it, kind of explained to people what I like to do with a trade like this. Because of course we can always close the trade down, right? That's always a choice. But when it has so much life left on it, why not do something else with it? Kind of lock in the gains, reduce some risk. That's what I like to do. Well, when you use my broker, that is shown very clearly, right? Tasty Trade does an excellent job of telling you what you're about to do with your trade when you roll it. If you use a different broker and you go to roll it, you're going to get something that looks different. The outcome, again, is still the same. So I originally bought this call for $1.50. Technically it's $1.49, but let's just round up, simple math. So I bought it for $1.50, and then just the other day I rolled it for a $4 credit. That means I got my $1.50 back and I had an additional $2.50 for credit. And that's cool because now I have this long call that I am holding with credit. That's weird, right? That's not something that most people end up with. So now the trade cannot lose. The bare minimum profit is that $250, and it can go higher than that because it's still just a naked long call. So if Intel was to go to 80, this long call would profit more and more and more and more. But at the moment, if Intel was to crash and burn and end up at $3 a share, I would still make my $2.50, my $250. So in that video, I laid it all out, showed what I was doing. This is the new position. And then somebody said, "That's great, but I don't use Tasty. I use Thinkorswim. What would it look like if we did it on that?" My first instinct was, well, let's just go to on demand and do it. Right. And so I did. I went to on demand. I don't know if you guys realize that Thinkorswim has this, but it has a feature called on demand up here, and it kind of sucks. It sucks really bad. If you ever want to try to day trade with it in the past, it is horrible. You'll end up just walking away in complete frustration. But I thought, well, for a swing trade, maybe it won't be that bad, right? It kind of was that bad. Anyway, I used on demand. I went back to the day that I bought my long call way back at the beginning, which was like August 4 or something like that. I bought it at $1.49, the same price as I have my own. And then I jumped forward in time and I rolled it using Friday's options because the on demand wouldn't let me use this week's prices. It's just a restriction of Thinkorswim, right? You can't get too close to like real price. So okay, it was fine. The problem is it did the roll in a very unroll like behavior, and I think Thinkorswim just didn't really put any effort into how their on demand functions. So what happened to the trade is it literally just rolled it. Let's explain what a roll is real quick. A roll is when two trades happen. I have one on, and when I go to roll it, since I'm long, it will sell the one that I had, and then it will buy the one that I want to buy all in one transaction. What the roll did on demand is it sold it for this great price. Let's just say I'm going to do it right now. It sold it for 770, 765. Well, let's just say 750. It sold it for 750. If I bought it for 150 and I sold it for 750, then I made $6. Woo, cheers. Then it turned right around, and out of that $6, it bought a call at the new strike that I chose. And it showed my new position as a debit of this price. And here's your new position. That's not how Thinkorswim does a roll. I know that's not how Thinkorswim does a roll because I've done rolls before. So the on demand did not accomplish the task that I had intended it to do. Instead, it just closed the one and it opened another, and it did not in any way reflect the fact that it was a roll. I might as well have just literally closed one and opened a new one and shown the position. So since that didn't work, I'm now kind of stuck on how can I demonstrate the exact same trade. And in the final outcome that I'm coming up with is that I can't. Instead, what I recommend, and I think this is going to be the best case, the best way to do it, is I'm going to log off of my Thinkorswim and I'm going to log back in on paper, and we're going to put a trade on paper, and a week or two, well, actually, better than that. Every time I stream, we're going to go in and we're going to attempt to roll the trade. Because as I've argued all along, if you don't normally roll things, and one day, one time you decide, hey, I think I'm going to roll this, how will you have any idea if that's a fair roll or not? I use that gas station analogy a lot, right? You drive by a gas station on your way to work. Every day you look at the price of gas and it's $3, $3, $3. And then one day you're on your way to work and gas is $2.50. And you think, well, wow, it's usually $3. It's so cheap. Even if you don't need gas, you're probably just going to get some anyways. Like, why not? On the other hand, if you drive by that gas station every day and it's $3, $3, $3, and then one day you drive by and it's $4, even if you need gas, even if you need gas, you're probably not going to stop and get gas there. You're going to go get gas somewhere else because damn if you'll pay $4 when you know it's normally 3, right? So in a roll, if you only attempt to roll it once and you haven't tried to roll it again at all, ever, how do you know that what you're looking at is a fair or equitable trade? You have nothing to compare it to. But if once a week or twice a week you was to try to go in and roll on Tuesday, they're saying you need to pay a debit of $1. And on Friday, you need to pay a debit of 75 cents. And next week, you need to pay a debit of 70 cents. And then one day you go in and they say, hey, we'll give you a credit of 75 cents. Really? You're going to give me a credit? I've been looking at debits for weeks and you're offering me a credit? It would stand out. You would see that there is something different, right? So that's what we're going to demonstrate here. We're going to go in here and we're going to put on a trade. I'm going to get the same call, but it won't be the same price as what I have on that other account because that other account, well, it's a real trade. It's been on for a while. I opened it with a roll, and so it just isn't going to be the same price, but it is going to be a long call on the 40 using Jan 16, 2026. And I'm going to demonstrate some of the things that are wrong with paper, but how to use Thinkorswim and the little flag that shows up because that's where you get your roll menu from. So when you go to place a trade, you have your natural and your mid price down here. If you're going to sell to open, you want to sell it for as much money as you can get, right? Aim for the higher value. This is called working the order. If you're going to buy to open, aim for the cheaper one, right? You probably have gone to flea markets or garage sales or tried to buy a car, right? You got to haggle, negotiate, try to get them down a little bit. And that's what you're doing here. You're trying to get a better price. If you're selling, you want to sell it for more money. And if you're buying, you want to buy it as cheap as you can buy it. So right now, the natural is 335, the mid is 330. I want to try to pick it up for 330. But a little bit of a tip here. If you're trading something that isn't very liquid, maybe it hasn't even had a trade today, just because it says 330 is as good as it can get, don't believe that. If you go to the store to buy a car and they say, I want $15,000, do you just believe that because that's what it says on the sticker price? Nah, we want to try to push a little bit, right? So even though it says 330 is as good as I can get, I would at least try to start the trade a little early. If you're going to do like I am and get more than one, don't get a bunch of them all at once. Just get one. Because what if 320 is actually really still too high? If this was something that had not had a lot of trades today, 320 could still be way too much money. And if I hit the button and it filled instantly, I would know that I just paid too much money. Your trade should not instantly fill. Put it back in real world perspective. If you're at the car lot and the guy says, "Well, okay, you don't want 15,000 for this car. How much would you give me?" And you say, "I don't know, I'll give you 12." And he says, "Sold. Yes, you can take it. Get that car right now. It's yours." Wouldn't you feel like maybe you paid too much, right? He was so happy to take your 12. You would probably be wondering, why was he so happy to take my 12? Maybe I should have offered him 10. Same thing. So if you're going to get, 5, 8, 10 contracts, shop around a little, make sure that that's a fair value. Drop the value, try to hit confirm and send. And if it instantly fills, knock it down a couple more dollars or a couple more points, and then try again and see how that one fills. At some point, you're going to get so low that the trade does not fill. It just sits there as a working order. And at that point, you'll know that maybe you went a little too low because you've got a working order. Now, since this is paper, I didn't move the bid or the ask. But if this was live, I would have moved the bid or the ask, right? I'm a market participant and you can see your effects on the bid and the ask. So let it shop around there for a little bit, give it a moment or two. If that doesn't work, this little flag here, just right click on that and hit cancel replace and bump it up a few, right? You can still see what the bid and the natural is. This is just working the order. If you have a trade on like this for a half hour, 40 minutes, and nothing has happened, just bump the order. Now, what we mean by bump the order is you go in and you hit cancel replace, but you don't actually change the value. You just bump it. So you bring it up and you just hit confirm and send. And what that does is it just sends it back to the queue. I don't exactly know how the odds and ends work behind the scenes between the brokers and the electronic, all of that stuff, right? But I know that trades at some point, they just get overlooked. And so if this sits there too long, they'll just ignore it after a while and there'll be more immediate trades. Some have gotten ahead of you at that point and now they're just not going to do anything with your trade. So you bump it and put it like back in the queue to where it's relevant to them again. I don't know why. That's like that's just the way it is. So, you know, patience is a virtue, but the clock is ticking. We got to get our trades on. So if it doesn't feel at a reasonable price, usually I give it 5 or 10 minutes. If nothing has happened, I give it a bump. If I know I'm low and I'm shopping low when I go to give it a bump, I might adjust the value a little bit, right? I might. It really just depends on how low did I start. So that's just a couple of tips on putting a trade on. This same discussion works with stocks, options, futures, really anything that you're trying to buy. Be mindful that these numbers are not telling you what you have to pay. They're just giving you a good starting point on what others did pay, especially if you bring up the last instead of the bid and the ask, because the bid and the ask are not the last. They're just usually what it was. And you can typically find things like the ask size, the bid size, what the last was on the bid, on the ask, and that can help kind of guide you in the right direction. For me, though, I don't like to trade illiquid trash. So if I have to go through those steps, I don't want it in the first place. I won't mess with it. We're going to go ahead and get this filled. I shopped around a little bit, but since it's not a real trade, it's paper, I'm not going to get the market to move. So we're just going to pay whatever and get it filled. And what we're going to do once this trade is filled is every time I stream, we're going to stop in here and we're going to take a look at it. We're going to try to roll it and see what they offer. This isn't the only one that we're going to put on because we need to roll some, even if they're bad rolls, just to see what rolls are. We're not going to roll this one if it's a bad roll. We'll wait until it's good. but I'm going to put on like Google or Amazon, maybe Meta or Facebook. I don't really care, right? We're just going to grab some other stuff somewhere so that we can roll those, good, bad, or otherwise, so that we can examine what the numbers they're showing you are and how you can gauge what your new position is going to be. This still hasn't filled, so we're going to pay up. That should fill. And of course, it's paper. Um, Instantly fills. Isn't that nice? It just instantly fills in paper. What a world. So we've got that one. It is only one, so that when we go to do a roll, the numbers are not confusing. If you're doing this for yourself and it's your first time and you want to just kind of play with the numbers, just do one contract. The problem with doing multiple contracts is how much credit you're going to get when you roll, how much you paid when you got the trade on. I've got clients that are new to options, and when I ask them a question like, "Well, how much did you pay?" and they'll say something like, "I paid $32.50." I'm like, "Good God, man, it's a $3 option. How'd you pay $32?" "Oh, well, no, no, no. I mean, I bought 10 of them." Okay, well then you paid $3.25, right? You didn't pay $32 a contract. So it will help keep your numbers simple if you just start with one, right? Nice and easy. Now, I did mention we're going to put a couple of others on somewhere else just to have something on. That way we can take bad rolls, good rolls, rolls we don't care anything about at all, just to get something rolled. Here's Meta. Let's put on something like put credit spread at the money. We'll just stay in that January area as long as there's volume and open interest. All right, I've got a $20 wide credit spread here, and they're offering almost 10 cents, $10. I mean, let's shift this just a little bit. Yeah, they're not offering a fair price. That's okay. We'll just tighten it up and see what we get. 245. All right, it's not bad. We'll do that. Analyze it so that you guys can all see this is the break even. As long as Meta stays above that break even, this trade will be profitable. And once it drops below that break even, the trade will start to lose money. It's a theta trade. So every day that we're in it, they'll pay us money because we are in it. And slowly over time, this purple line will start to take the shape of this cyan colored line or blue line. And at expiration, that's what it will look like. Here is the zero line. So this is all negative and this is all positive. And we built it at the money. It is a credit spread. We collected credit to open this position. I like doing it this way much better than I like doing it way out of the money. But we're going to do both of those. Let's try to sell it for as much as we can get. It says 245. I think we can get maybe 247. And while we're here, we'll just look out at some of these. That looks good. We'll do a 700 and a 680, which is also $20 wide, like we were talking about earlier, and $8 credit. That's not bad for being that far out of the money. We're going to send that into the analyzer, and we're just going to try to fill that. Like I said, since we're on paper, that shouldn't have. You see how fast that filled? That told me I could have got more credit right there. So if you're following along and you just went to put on that same trade, don't fill for 805, go for 810, see if that fills. Why did that happen? Well, look at the bid ask here. We got 25 cents between those two numbers, and we've got about 20 cents between those two numbers. Well, that's a lot of room to slip. And so, if you were doing this on a live account, you might have just gave away $5. I know that doesn't sound like much. Like, who cares? It's just $5. Yeah, but wait till you've been doing this for a while and you start to size up and oh goodness, my quantity was set to 15, right? That's a lot. Let's go ahead and close some of these. So we do have the flag. The flag is up here showing what that's for is if you've got everything closed, you can scroll up and down, and I know now that I have a position here because of that flag. Then I can open it up and I can see the flag on the individual strikes. This is really helpful because you can right click on this and you have a menu, and you can right click over here and you have a menu. That allows you to deal with one particular leg of the trade or all of the trades all at once. I want to deal with these two. So let's just do this a little bit at a time. We're going to do a closing order on this one, but we're not going to do 15. We're going to do 14. And I'm going to go in and change my settings so it doesn't auto 15 anymore. All right, that got us down to 1. And now the other. And that should autofill too. And then we'll be done. It did not autofill. There we go. Now it'll do one at a time. We just want it to fill and get out. So we're going to bump it a little. My goodness, come on. Okay, that got it done. So now we've got a single position on both of those. Individually, this is what that one looks like. Notice that we're already in the money. So as long as Meta stays above that line in the sand, which is probably like 692 or something like that, as long as we stay above that, this trade will be in value and we have profit. The profit that we have is $8. That's $800, and Meta just has to stay up here. If it falls below here, then we've got $1,200 of risk. It's all paper, so it's no risk at all, right? It's not real. I like my way better. This is the way that I like to put on my trades. It sucks that it's got that extra one on there, but just go with the flow. Um, it's okay. But when you put them on at the money, you've got more control over how much credit you get, how much risk you have, and it's a lot easier to decide, should I get out of this trade if it's not working? I think I've made that argument really well. So to solve the problem with the Intel trade and the roll, this is my solution. That we've got the trade on now in paper, and every time we go to trade, or every day that I stream, we're going to come in and look at what a roll is on here for that Intel trade. and try to make a determination of is it a good roll or not. I kind of expected that to fill instantly. It didn't. Hmm. I'm probably going too fast for paper. We'll just let it sit there for a minute. Oh, guys, on the 22nd, you missed it. I didn't post it in here into the to Bullish Bears. It was at another spot, but I was looking at the Tradie Ticks Google on the 22nd, and I posted that I was going to build a short on Google there. I didn't put it into this place because, as I've talked about, when it comes to the Bullish Bears, the posts that I put in the trade channel, I don't want to put any in there if I think they're going to be complex or that they need to be rolled in any point in the future. I just put trades in there that I expect to be opens and closes. Simple, like buy a put, buy a call, that sort of stuff. So it didn't get posted in there. But um, I did put on, I did put on and built out that trade. Here's the post. The picture that I took that day, Google was at 254.60. And look at the dealer positioning underneath that picture. I'm going to show the live stream here in just a second. Let me bring up the Discord so people watching the replay can see what it is that we're talking about. All right, this was where Google was at the time. And see these dealers? When the dealers are net short, retail is net long. But not just retail, like anybody who's not dealers is net long. So they're net short, they were deep net short. And we were way up here topping out, and I thought that's a really nice place to short Google. So my post was looking to build out a short on Google against all that exuberance. But like I said, I did not post it into the trade alerts, which is the channel that I was talking about. If you guys don't know it, there is a trade alert channel. We don't use it much because we're not a trade alert service. That's not what we do, right? That doesn't mean we won't share trades. I absolutely will share trades. But I am particular about which trades I share in there because if it's some complicated trade or a trade that I think I'm going to roll at some point, I'm not going to put it in there. Because inevitably somebody will get the entry, then they'll quit or they'll go on vacation or they have a day job and they never catch the exit. Then they get run over, get assigned, they're out thousands of dollars, their butt hurt, get salty. I just try to keep them simple. It's not to say that I don't post anything in there. Me and Jeremy both. But that Google one, I didn't have a good short signal. I just had a lot of bullish exuberance and I decided to short it. So you know what I mean? Like everything said, wow, this is really bullish. And I said, yeah, I'm going to short that. That's not a high conviction trade, right? It's not one that I would want to put in that channel. But it's worked out pretty good since 256, 254.60. We made it all the way down to 238. It's not bad. Well, I tried to fill that call, and it looks like Google is running away from us. I'm not doing a good job of haggling because I know it's paper, and I'm just trying to get a couple of trades on that we can roll later. Every broker shows you a roll just a little differently. And what I highly advise you is go to your broker and put on some trades that you can roll, preferably in paper, right? Um, if your broker doesn't have paper, do it anyways. If you want to roll, you've got to get to this point, right? So I went to my Fidelity account and I put on a real trade on my real account for the sole purpose that I want to roll it. That's the only reason I did it. Maybe it'll make a little money, maybe it'll lose a little money. I don't care. By the end of that trade, I will know how this broker deals with a roll, right? That was my goal. So, um, I didn't pick anything wild or crazy or expensive. It's a cheap stock. I paid $4.20 a share. I got 100 of them, and then I sold a call against it. You know what I mean? Like, that's it. What's my risk here? The stock goes to zero. I won't stay in it while it goes all the way to zero. But I could lose a little bit of money from the share price. I could lose money from the option that I sold. At the moment, that option, I sold it for $1.20 and it was at 4.20 last week. So I was down $300. But I'm not down $300, right? Cuz all I got to do is give them the stock. I don't have $300 of risk in this trade. Worst case scenario, I give up the stock at $4 a share cuz I sold a $4 call. I paid 4.20. I sell it at 4, I lose 20 cents. But I collected $1.20 in credit, so I make $1. Even if I get assigned, I make $1. That's $100 trade right there. I'm good. I'd rather not do that because the stock is up, $3. But I don't have $300 of risk here. That's the point. And when this trade is done, I will know exactly what Fidelity roll looks like. Which, by the way, I've been making videos of. I've gone in, I've tried to roll it. I don't like the value that they're offering me for the roll, and I don't take the roll, but I've recorded what they offer. So this is Fidelity's roll tab, and they're asking, what do I want to do? Well, I want to buy to close the one that I'm in, and I want to sell to open a new one somewhere else because this is a net short trade, not like Intel. That's a net long trade. So I want to sell a new call, and let's just stay in December here for a minute. We're going to go to the December 19, and instead of doing the $4 call, let's roll up to something like a $6 call. Immediately, I can see that my trade would be a debit. I don't want to pay a debit, so I don't want this trade. They're saying that I'm going to buy my call back somewhere between 350 and 360, so 355. And then I'm going to sell another one at 236. And the difference between those two is going to leave me with a debit to pay of $1.20. You see how we got that math? Well, here's a little tip for you. You don't want a credit, a short call held for a debit. That's a guaranteed loss of $1.20, no matter what. So I know I don't want this trade. What if we roll below my $4 strike and we look at the 350 strike? Well, now they're offering me a credit. They're going to sell my call at, they're going to buy back my call at 355 and sell a new call at probably $4 is what that looks like. And if they do that, then the difference between those is 45 cents. And my new position would be a 350 strike call held for a credit of 45 cents. The- So just looking at this, I know exactly how Fidelity runs a roll, right? But you need to know how your broker shows you what your new trade is going to be. Otherwise, how do you know that you're getting a good roll? So we've got a couple of these on now, and by Friday, they very likely will have changed in value. So on Thinkorswim, we'll come in and we'll do a roll, and we'll see what that looks like. Now I'm getting the heck out of paper because I don't want to hang out over here. Um, I don't like it. With all this talk about risk, we've been hearing about risk all year long, and the market has just climbed the wall of worry. And it climbed and it climbed and it climbed. It's still doing it now. Every signal that I got, sure, this is indicating some weakness, but we're still above that red line in the sand. So we don't have a short to put on in the market, not the broader market. Individually, you can pick, stocks to short, but I wouldn't get out of my longs necessarily. Maybe defend some. If you're in profit, you could think about reducing your position size, but man, I wouldn't get out and I wouldn't get heavy short in the market. We just don't have those kind of signals yet. All right. So the other topic that we had is about the various tick indicators. Now, you guys got to remember when it comes to that Thinkorswim workbook, I built it while I was learning to code. And so a lot of things that I ended up putting in there was just like, oh, hey, look what I can do. Add a label to a moving average, make a moving average change colors, put a cloud with a label and it changes colors. And now you got three different indicators, all of a moving average that changes colors, has a label, and might have a cloud on it. Their aesthetic changes, right? We made it look pretty, but we didn't really do anything. It doesn't function any different. It's still the same moving average, right? That kind of logic is important to understand because when it comes to these tick indicators, a lot of what I did was nothing more than just changed the way that it looked. It functions exactly the same way that it always did. So what we're looking at right here is the one that I use and take pictures of most of the time in the chat, right? When somebody asks what's up with the market today, I go in and I evaluate things and I look at this. I'm sure if you've been here for a while, you've seen me post pictures of this. That's the tick chart that I like to use. But in reality, all it is this candle chart. Notice my chart, TICK. It is these candles turned into a line. So if we just go in here and we make this a line, this is that. That's all. And I just made it white. It doesn't turn, red and green or blue and orange or nothing like it. It's just white all the time. And then I added the background green, lighter green, red, orange. That's it. Some lines, but it's just the tick, right? So, with that in mind, knowing now that this is a tick chart and this is a tick chart, and they're both exactly the same tick chart, there's no difference in them. Just one was in candles, like that, and the other one was a line. Now, let's look at some of those ones that are on Thinkorswim, which, by the way, on the Bullish Bears website, I also did some blogs on tick and I shared Thinkorswim indicators in that blog post too. In my own blog posts at the OEC, I went into quite a bit of detail on the ones that I use constantly, but that doesn't necessarily describe all the different ones that are in the Discord. So here's the Thinkorswim Discord. We want to go to tick. So we just search for tick. All right, this is the article that I mentioned that has indicators in it. It's on the Bullish Bears website. It's spinning, which tells me Lucian probably went in and edited that page at some point in the last few years. And I probably just need to click it to get it to refresh. But either way, it was a nice little write up discussing the tick and what it is and the AD and all that good stuff. So this is not the tick. This is cumulative tick, right? It's two different things. What's the difference? When you're looking at tick, every new candle, you have a candle that opens where the other one closed, and it'll go higher or lower, and then it stops. And wherever it stops, we get a new candle. That's very familiar because that's what price does, right? It's, it's very normal, it's very common. Cumulative tick looks at what was our number and then what was the new number and it adds it. If the numbers were positive, it adds it and we go up. If the numbers were negative, it subtracts it and we go down. So every new candle, it says what was those values. And if it was minus 400, then it takes 400 off. And then it looks at the next values and say, what are those values? Minus 200, it takes that off. So it's just looking at what we had and subtracting each tick all day long or adding each tick. So here we got bullish. The candles were closing higher. We got above zero. The value of this one was 60. It added 60. This one was negative or at zero. Nothing happened. Then it was positive by 140. It added 140. It's cumulative, right? It just keeps adding and it keeps track of it all day long. Every day at 9:30, it starts at zero. We get our very first print and away we go, positive or negative through the whole day, cumulative tick. And there's four markets here. This is the New York Stock Exchange tick, but there's a NASDAQ tick. I need to get rid of that K. I think it's TIKQ. See if that one's it. It's in the breadth here. So we can go to indicators. Oh, I forgot the backslash. Here's the NASDAQ tick, right? And then there's a tick for the Russell, and there's a tick for the S&P. There's a tick for all kinds of markets out there. So instead of just doing the NYSE, this cumulative tick is doing four markets. If I click on it, we open it up, we can see what those four markets are, or we can just look at the label over here. NYSE, S&P 500, the Russell 2000, and the NASDAQ. The labels tell us which one is which. So cumulative tick, not tick. Different things. Now we got this, which is called simple tick. It is, but it isn't, right? So it's still the same thing. It's just tick. It's showing you where it closed, and that's all. Nothing else. Much like a line chart will only show you the close, nothing else. A line chart just shows you close to close to close to close. All right. My line tick closed at 678 or maybe 701, whatever that value was. In fact, let's not even guess. Let's just go in and make it show us where it closed with a dot. Ah, that's the zero line. That's not one we need. We need the market line. That way we don't even have to guess, right? Like 693. And that's where this closed. And then the next one and the next one, right? So every one of those dots here is represented by the close of this one. Once this started falling, this started falling. It's the same thing, right? It's literally the same thing. We went below zero here. We went below zero here. We were above here. We were above here. That's it. It's just giving it to you in a different style. But this one has trend built into it. I covered trend in the article that's on the Bullish Bears. You got tick and then you got trend. Trend is a math formula and it's inverted, which really messes with new traders because if it's low, it's good. If it's high, it's bad, which is opposite of what we would expect things to be, right? So, um, screw trend. And trend's really old, anyways. It has limited value, but this simple tick is just a really clean version of tick, right? That's it. Especially if you didn't have my line chart and you only had the candle chart of tick, this is so much nicer. It's so clean, really easy to read compared to all those candles. This is the cumulative tick again, but it only has the NYSE. It doesn't have the S&P, the Russell, just the NYSE. Nice and clean. Tick labels. So exactly like it sounds like, it's just going to tell you where's the tick. Minus 400, plus 200. That's all. Just a label telling you where we are, along with trend. This is the simple tick, but it also has built in other things. It's got the previous days. Um, it uses the average daily high and average daily lows. The reason I built that is because by default, I use these lines 1,000, 800, 500. Well, people have asked me, hey, where'd you come up with those lines? And I just kind of made them out of thin air. I didn't have really good reasons for using them, right? 1,000 is a really good round number. I could have used 1,100, I guess. I could have used 900, right? Like, I don't know, 1,000 works and half of 1,000 is 500. So, I went with that. I didn't have a good reason for picking those numbers. And when I was explaining that one day, I thought, well, what if we actually had a good reason for the numbers we choose? So that's what this is doing. This upper line right there, that's an average line. And this lower line right there, that's an average line. So instead of using the 500 and the 1,000 that I just put on there by default, this one's actually just trying to look at what the average is instead and hook us up with that. It sounds cool, right? I mean, I just threw it together and see what it would look like. but the background, the red and the green sticks, or what we call histogram bars, that's just using this same one as up here, that simple tick. This one, it's just tick, right? So now you know what that one is. It's just tick, but the lines that look like these kind of a Bollinger bands around it or whatever, those are the average instead of using the 500 and the 1,000 that I was using. And if we was to turn that into cumulative, it would look like that, right? So we already talked about what cumulative was. That's the cumulative version of it. And then this was the start of what you see me use now. And eventually it went from this to what you all seen me start with today, which is this. So along the way, I grew and adapted on how I wanted to look at tick. And this is the one that I came up with that I use constantly, and I really like it. So now you know all the different versions of what's in there. This one is unique because it's actually using a moving average of tick. It's not tick, right? It's not. It's actually just an average of tick. But I like it at a glance on 15 minutes, which is unique. It's just that one little thing that I don't mess with. I just leave it right where it is. The thing about indicators is if you can think it, you can make it, right? And I've come up with just all kinds of crazy ideas where I ask, what if? And then I go in and code it and see what happens. Yeah, he really likes to sell his indicators. The the Squeeze Pro, over $1,000 indicator when he first came out with it. It's just different strokes for different folks, I guess, right? If those indicators could make people all the money that it promises, then he wouldn't need to sell indicators or run infomercials to have people sign up with $500 subscriptions and $1,000 indicators. He would just give them away, right? Me, I give the indicators away because I'm not making a money on you. I don't make money selling you things. I make money trading. I come in and give back, sure, and I don't do it for free. I get paid to be here, but I'm the lowest paid out of all the members that work here because I just don't care. If this was paying my bills, I'd probably be a little more aggressive about how much I get paid, but I don't know. I just want to help. I'm here anyways, right? If I wasn't in here with you guys, I would still be at the office. I would still be at my desk. I'd still be trading. I would just be all alone doing it, which is boring as hell and isolated, and it sucks. I'd rather have someone to chat with, especially if I can help someone while I'm doing it. So it'll be interesting to see what he comes up with. Over the years, they have come up with some pretty neat indicators. I just I get a little salty when I see the price tag on some of those indicators, especially when I read something and it's like yesterday's high, yesterday's low, $20. Really? You're gonna charge somebody $20 for that? And people buy it. Otherwise, they wouldn't bother having it up there. I'm getting logged in now because I have an account over there. I've never spent any money there, but we got access to different things. So I've got all of those, the VWAP Max, Squeeze Pro radar, all of this stuff. I don't know what it costs, but I'm sure it wasn't, it's not cheap. And usually their screens look like this. They're loud with a lot of stuff and a lot of indicators. Turbo kick, huh? I don't think I have turbo quick kick. The access to the stuff that I do have is mostly their older stuff, not their newer stuff. And I don't complain because, well, one, it's free and you don't bite the hand that gives you something, right? So, oh, turbo tick, yeah. Um, I don't have it. I get the free stuff that they say I can have, and I look at it. I don't. Yeah, I'm looking at what they have to offer, and I don't see it. But that doesn't mean by next week it won't be in my box here. It very likely might be. Well, I mean, good luck with it. It won't change anything at the end of the day, right? Like I've got all these tools and all these skills and a lot of things when people ask, "Hey, did that indicator, it really changed the game?" Usually the answer is learning about what that indicator does helped me more than using that indicator itself, right? That's usually the way it works. Kind of like that checklist for the trend day stuff. Having that checklist didn't make me better. Knowing all the things that I know that gave me the ability to actually write out that checklist, that's what made me better, right? And so with all these indicators, I found over the years that I don't use most of this stuff, but I learned about these, and that's what made me better. Yeah, and don't get me wrong. I like being able to put a number on something. We can all see trend. We can all see momentum. We don't need an indicator to do either one of those. But is it increasing or is it decreasing, and by how much? Give me an actual value number. Well, I can't eyeball that. No better than you can eyeball how fast you're driving down the road just by looking out the window. You need to look at the speedometer to know, are you speeding or not? Otherwise, you're just guessing. So the same thing when it comes to trend and momentum. I can tell you there is trend and I can tell you if it's increasing or decreasing without an indicator. But by how much? What's the rate of change? And where is it now compared to where it was yesterday? That's where an indicator really shines so that you can quantify with actual values what a particular market is doing. And I find that really valuable, especially for swing trades. For day trades, I mean, just give me price. But when I was new, I went down this list and I did every single indicator. I put it on the chart. I looked at it. If it had an accompanying article, then I read the article. If they could name who made it, because not all indicators can say that, right? Like who made the moving averages, there's just some indicators we don't know. If they named who made it, I would go research that person, see if they wrote any books. If they did, I'd try to grab a couple, try to get a feel for that particular person. And that's how I grew as a trader. At the end of the day, it always just comes down to learning. We cannot paper trade our way to success. And I will continue to argue that until I'm blue in the face. The only successful people that I know are people that learned to trade. They didn't paper trade their way to success because paper trading doesn't educate you. It's not worthless, by the way. So, I'm not saying you're wasting your time if you're paper trading. I don't believe that. There is value in paper trading. It just can't be the only thing you're doing, or it will never get you where you want to be. The PMO on stockcharts.com is really popular. I've noticed that it's not really such a big deal here. Thinkorswim doesn't highlight it as much. So Tesla is coming back up into that previous sell zone, and I think really if we were just to use the simple stuff, 450 is my line in the sand because it's that big options level. But you can see the wicks from the previous buying. Want to turn on things like the volume profile and TPO and see what that wick looked like with those tools, and kind of evaluate when we got up there. Did buyers get exhausted and we fell back down, or did we get up into a bunch of sellers who rejected us and we came back down? Because that's a really good question to ask, right? And using my eyes, we can't tell if it was one or the other. That's one of those times where indicators really have some merit to it. So we'll start with the 65-minute, and now we can see we just got to broaden this out a little bit. We need more time. That'll do it. Oh, wow, just barely. Should have put more time on there. All right, well, we have to do it different ways. For the week, when we got up there, compared to the activity that we had for the whole week, that was not a lot of selling up there. So it looks like buyers just got exhausted and we came back down. I'd like to see it better from the point of view of just that day. But looking at this on the whole for the entire week, it really just looks like buyers got exhausted up here. But I'm getting, um, I'm missing a lot because what we're looking for is just right at that point. And we know that that's not how things work because this entire week is what we're evaluating. And when we bring it into perspective like that and we start to zoom out a little bit, what we can realize is from that perspective, this very likely was a lot of selling activity, not just buyers that got exhausted. We don't have the right profile up, but what we would want to see is a lot of volume, a lot of volume. And again, we don't have all of the data. If there was like there, that's a better line. If we could see that the delta values and if it was net buying or net selling and how much, that would be really helpful. But just seeing a lot of trades up there would even be valuable. So let's jump to, another time frame, kind of evaluate this differently. And also, what was the options like back then? This is one of the ways where the go back on Thinkorswim can be helpful. What was the trading activity that week in the options, especially on the day that we topped out, which was December 18th? We'll talk about some end of year stuff. So we can go to think back instead of on demand. Go to Tesla, December 18th, and we can look at how trades were happening that day. This is the end of day values for the options that were traded. I thought I could turn on more columns, but I guess not. Oh, there it is. There it is. Never mind. We got it. They were hammering on that 480. And they were loading up in the puts. Let's go back a day. Look at how much the implied volatility changed on that. It went from 103 basically to like 130, 120. Massive volatility came in on those options that day. These numbers change due to the trading activity that takes place inside that strike structure, right? So if they trade a lot of out of the money options, that increases the uh, implied volatility average on the side. So we can tell if they're getting a lot of work in there by looking at the value changes over here. It's supposed to be low in the front and higher farther out, but it got really high in one day. For the next day, did it spread? No, but it jumped. And it's supposed to get a little high on Friday. That happens, but I mean, you don't want it to be too extreme. I hate using end of year stuff. It always acts a little wonky. The only other thing that you could do at this point would be to use the on demand and go back and look at that as it was being traded up there, which I do not want to do. As I've stated earlier, the on demand is trash. It's just complete trash. Now that we are where we are and we're getting back up into that zone, the concern that we want to have is what's going to happen with this breakout. It's a nice breakout. We've been in a consolidation, kind of tightening up. You could call it a squeeze. If we put Linreg on there, um, we could just start from this last pivot. That you see how sharp it is, pointed to the upside, and look at the curve structure. You got reciprocation. What you got on the bottom, you got on the top. What you got on the bottom, yeah, you'll probably get on the top. So that stands out. But read it candle by candle, the way they teach it in like OCR. If we was to run back here, this was our wedge, our range. And then we had this island. If we had gapped up here and built this island and gapped back down, it would have been an island reversal. But instead, from that island and this gap up, which is really bullish, we ran, closed at the high, almost a Marbozu, but not. Gapped up again, never closed the gap, almost a Marbozu, and closed at the high again, and then gapped all the way up to here. That's why having these candles colored the way that they are really helps. We opened way up here, and then we fell through the day and we closed here. But another really big gap. I mean, look at that. We went from 395 to 425 basically with just a little bit of rounding. That's a huge gap. and it closed high too. It didn't give it all away. Never closed that gap. 2 days of consolidation, three really, because look at how that one closed. So inside day, another inside day, another one, and then a fake breakout, and that failed. We're in the range again, another breakout, and here we are. That gap right there got closed. I think that might be the only one. Nope, this one got closed too. And this one got closed. So it's closing gaps now, but that's another big bullish breakout. And so far, it's going to close at the high again. Oh, yeah. Driving without a speedometer. I mean, back in the day when we would use a standard, it wasn't that big of a deal because you just knew, yeah, I'm in third, I'm good, or I'm in second gear, I'm good. I was on the motorcycle last night driving west into the sunset. I could not see my speedometer at all. So I was just going by, what gear I was in on the bike. Plus, if you're driving without a speedometer, all you got to do is just go the same speed limit as the cars around you, right? That wasn't that big of a deal. But yeah, there's always workarounds, isn't there? Same thing with price action. Even if you don't have an indicator, there's different ways to tell if it's speeding up, slowing down. So when we take Tesla and we bring it out to a weekly, we have this control bar that I was using for the proposed iron condor. That iron condor did not last, man. It broke out. Big expansion bar. But look how easy it is to tell where control is. It's the biggest bar. And everything inside that bar was just us waiting to get the breakout. Nice and clean, easy to see exactly what's going on. And now we got the big breakout. So that's easy enough. If you go to a weekly and you still can't see where control is, go to a monthly. If we went to the monthly, we had this bar. That was the control bar, but we're out of that now. So we'd want to look and say, okay, well, what's in control now? The bigger range is in control. So that right there. Me, I like to shop around until I find the information that I'm looking for. I find clarity somewhere. Like, look at that wedge. Now that we're on the monthly, that wedge is really easy to see. Oh, yeah, there it is. It wasn't so easy to see when we were here on the daily. I mean, we had this wedge down here. We had this sort of I can't draw a rising box, but we had a rising box here. These sort of moves, it looked like it was consolidating while it was waiting on the car data to come out. And then the car data came out today, and boom, we got the breakout and the run. If you guys followed what we had talked about before with swing trades, yesterday this set up in the afternoon for a really good swing trade. The the discussion we've had before is you want to look at things after 2 o'clock and see if it has already done some sort of rope a dope and that it's going to close higher than the midpoint. Then evaluate what happened on the drop. And when I look left, I see this midpoint, whatever that happened to have been. So price came down, it caught the mid, it ran back up. Now, sure, we were still inside the previous day's range, and I would want that midpoint to have some clarity, but the rope a dope was really strong and it was pressing against the high of the day. If I was looking for a short term trade, say Friday's options or maybe next Friday's options, that's not a bad play. It's not straight out of the textbooks and it doesn't have a backing on it. Say to be really bullish or really bearish or a classic pattern, but I would trade this stuff. And I do trade this stuff. I have traded it. I will trade it again. The thing is, I don't even look for those kind of trades if it's a week where we've got something really bad like non-farm payrolls or a government shutdown or goodness knows whatever, right? Always something. I don't look to try to trade into uncertainty. There's just no reason to. Trading this for no reason in front of uncertainty makes no sense to me. If you had told me yesterday that they are going to do their car numbers today and that three analysts just crawled through all the data and thinks that because of a new plant they're going to have blowout numbers and are going to break out, well then that would have been a reason, right? Because then we would have had something deeper than just the candles. But all right, so with those studies on the tick, hopefully what you've realized is a lot of it is just the way they are presented, whether it has a line or a label or a cloud or something like that, and that most of them are just giving you the same number. It just happens to look a little different. I know I pulled up a Discord. There it is. And I've got a lot of those sort of things in this Discord where I learned how to make something and I was like, oh, well, that's cool. What else can I do with it? And I just changed things. And then some of them aren't even mine. When I put something in here that I didn't make, I really tried to tell people, hey, I didn't make this because I'm not trying to take credit for something that isn't mine. Now this is looking at Apple's price and it's looking at the all of these things: the breadth, the average advanced decline, the lowest advanced decline, the current advanced decline, the tick value. Is trying to put all of that together. And if it's on Apple, that's great. But what if you put it on OKLO or JOBY or something like that? It probably wouldn't be all that great because JOBY is not going to be represented by the NASDAQ, right? It's not going to care what the advanced decline is today. And you got to kind of grasp that. Consolidated tick, advanced decline, breadth, market breadth, those things work for things like the Mag 7. They work for the SPY, the Qs, the indexes. They're not going to work for just some Joe Schmo junk company, right? Because those Joe Schmo junk companies aren't going to be influenced by market breadth most of the time. They're headline markets, especially penny stocks. Those are definitely headline markets. I did put in an all around alert system somewhere. I think it's the breadth combo. Full service market breadth indicator. This one right here. This thing is looking at a lot of market breadth. But unless everything lines up, you'll never hear from the indicator. It just stays nice and quiet in the background. But it's looking at the advanced decline on all four major indexes. So that's one thing. This entire paragraph talks about nothing except that advanced decline. Then it's looking at the volume ratio for all four of those indexes using the U-vol and the D-vol for that ratio. Then it's looking at the tick for all four of those indexes. Then it's calculating the trend for all four of those indexes. If it all turns bullish, it lets you know. And if it all turns bearish, it lets you know. If they don't all four line up, it just stays quiet. And why I designed this is those days where we just get blowout price action and we're like, damn, look at that. It's just going. You would really want to use it on the indexes, right? QQQ, SPY, SPX, ES, MES, NQ, those kind of days. So take today. It looks bullish, right? I mean, that who could argue that that's not bullish? But is it bullish because of breadth, right? Like, did the Qs go up because we were seeing a lot of trades in Apple and Microsoft and Nvidia, or did the Qs go up because of the dollar and yields and commodities and treasuries and oil? Because that's a really good question. If I want to know, will this continue until 4 o'clock? If I was looking at it at noon today and was trying to figure out, are we going to break higher and or are we going to break lower or are we going to just sit here? Then I would want to know, where did this fire come from? Because something put gasoline in this market and lit us up. And if it was options, we'd want to go to the options market. If it was breadth, we'd want to go to the Mag 7, right? If it was treasuries, we'd want to go look at the dollar and the 10-year, and every one of those groups will tell us something, but we need to know where to look. So that indicator was my attempt to eliminate one of those groups. I think I've got it installed already. I think. Let's just see. Sure do. So it's just running quietly in the background. And if all of those light up, then we should hear an alert and we would see a label pop up over here on the far upper left side. So, it's all right. Does its thing. There's so many indicators that are in there that do just unique things. And I've put notes on stuff that I'd never made, but I had thought about, or custom indicators like the TMV. The TMV is in your Thinkorswim, and it uses all of these things: the CCI, the simple moving average, the Keltner, the ADX, the volume oscillator. It uses all five of these. So you don't even have to do anything, right? You just load the TMV and it just works. The reason I made this file, though, is because most people say, what the heck is the TMV? I don't even, what is that thing? So I broke it down and explained what it is, what settings it was uses, and then how you can use it. I think I even made my own custom version because we tweaked a few settings due to an older style Keltner channel versus a newer modern style Keltner channel. And one thing that's helpful though is finding authors to things like Woody's CCI. I don't know if you guys have ever heard about this guy. The Woody's CCI indicator is pretty damn amazing, and the guy that created it has a ton of background. He's got books and videos and classes and all kinds of stuff that goes with it. My only thing with this guy is he got cocky and he was like, "Yeah, just turn price off and just use my indicator. You don't even need the candles. Just look at the indicator and trade that way." I'm like, "Okay, I'm done with you." And I never went back and looked at any of his material after that. But that's just, that's just me. If you ignored that and just looked at everything else, he has some very unique signals, right? Like they're very unique. And when I was working through his material, it taught me to pick up my signals the way that I do, right? Like this the way that I take pictures of this and I share it and say that, it looks like this, but we need it to look like that and blah blah blah. I picked that up from his material, the concept of doing this sort of a snapshot in time of what a really good pattern looks like if that pattern happened to have come from an indicator. So, you get different things from different sources. That was a skill set that I didn't really embrace until I went through Woody's material. Now, I don't have access to a lot of his material, right? I was just grabbing what I could grab on the internet at the time. But if we was to search for Woody's, I think I still have some of his stuff. Yeah. The ghost pattern, the PDFs that I was able to collect, some of the pictures of the signal, exactly what it's supposed to look like. It's all in there, right? And it's just one example. So, you know, dig around, see what you find that's interesting and just run it down the rabbit hole. Who knows, right? The light comes on and we get that little aha moment from the strangest sources. So, you know, another place to get a lot of good indicators is from the Thinkorswim team. They work for Schwab now, but James and Connie and Barbara, all of those guys worked at um, Thinkorswim, Schwab, and I think they're still doing live streams now. They have their own Twitter accounts, and the old man, his name is Frank. He likes to trade futures, so he's got custom Thinkorswim indicators for futures that he shares in his Twitter. It's like just this attachment that has all sorts of futures indicators. And then James is an options trader that has a bunch of options indicators on his Twitter account. Rocket again, huh? They were they were talking about a new IPO company today when it comes to insurance. Insurance is really big. I know Rocket's not insurance. It made me think of house insurance. Um, yeah. Just hey, when it comes to Rocket, also keep track of Open and Redfin. Those three together are a really nice tell. But keep your eye on yields if you're getting into that space, because yields will directly affect Open, Redfin, and Rocket mortgages. I'm looking for that other Schwab account. Okay, this is James, by the way. He does a lot of coaching stuff with Connie and Barbara. I'm glad to see that he still works there. Cameron. Oh man, he's gonna love that I called him James. My bad. There's there's Cameron, James, Connie, Barbara, and then the old man who I believe his name is either Kenny or Frank. This guy is not James. James is grumpy. This guy is never grumpy. Uh, he's always this happy, bubbly guy. Still, yeah, that's Cameron. But I called him I called him James at first, and that is not James. That's Cameron. James is kind of grumpy, a little heavier set. That's not him. But they have a lot of really good stuff over there if I could find the right channel. But that's one of them. Trader Talks, Schwab Coaching Webcasts. I'm going to just write that down because inevitably I'm going to be looking for it again and I'm going to forget. Speaking of webcasts, hey guys, here's a really good one for you. You know, when you're looking at the market during the day and you're like, where the hell is all of this push coming from? Why are we crashing? Why are we rising? What's going on with whatever? I found a really great podcast that so far is free. I don't know if it's ever going to stay free, but it's free. It's that new Bloomberg podcast. They've been announcing it for, I don't know, 9 months. But to me, it was just noise, them running their little ads, and I never pay attention to their ads. But the other day, someone was like, "Oh yeah, I heard it on the Bloomberg podcast." And they do a podcast 2 or 3 times a day. If there's something new happening, or if they've got a description of what's going on, and they're only like 3 or 5 minutes long, short, sweet, to the point, and they're done. They are a really good way to try to figure out what the heck is happening today. Why are we pushing so hard to the upside, or so hard to the downside? So check those out wherever you get podcasts. I don't know. I've got Apple and I tend to use that, but if you got a RSS feed somewhere, if you're old enough to know what the heck I'm talking about, then just get alerted through your RSS feed and run it that way, and it'd be good. Oh, come on, man. I ain't that old. Let's see if this guy asking a question is in the live stream. It does not look like it. Um, I'm going to try to answer him live and then he can catch the replay. So, the really short answer, the question is, does anyone know how to, or if, the Thinkorswim volume profile can be set to show the size of the buy and the size of the sell orders within the profile bars themselves, right? So if you guys know what we're talking about here, we're talking about your simple everyday volume profile. So, load up a chart, bring up a volume profile, and they're talking about, can we make this so that it shows maybe 60% was a buy and 30% was a sell, blah blah blah. And the short answer is you can't do that with Thinkorswim, right? That's the short answer, is that you just can't do that. Now, if you've got the book map on Thinkorswim, that's a little bit different, right? Because with that, they have something comparable to that. Okay. So you just got to turn on Bookmap and get yourself a subscription that runs about $30 a month. The thing is, Thinkorswim doesn't actually give us access in the code to how a trade was performed. Did it hit at the ask and above? Did it hit at the bid and below? Because if we're going to run something like a delta, right, like a volume delta indicator, we've got generic bastard versions of a delta indicator, and we calculate it the same way that TradingView does. But it's a generic bastard version of the system, and it's not the correct way to do it. Let's see if I can get one of these to actually show up. One of them was going to work. So far, none of those. That should be working at this point. One of them should have worked. Delta label is working. Volume delta. Lower study. There we go. Lower study. So this is that buying and selling, right? And even this isn't doing a very good job because it's only showing it was all selling. And we know that ain't true, right? That candle is red and it says it was all selling. This one is green and it still shows selling. So, from a volume delta perspective, that's not very good. What is better is if you're running something like the better volume indicator, but you can't get the volume profile to do this, right? What this is doing is it's looking at, well, how much of that candle was buying volume? How much of it was selling volume? I went in and I coded my own version of this using something like volume buys versus volume sells. And I really think that this is what you're asking for, but in a profile, right? So that it showed this much was a sell and this much was a buy, but it's running across the screen on that profile at the time, right? And the short answer is you can't. But my answer is you can't because they don't give us that code or they don't give us access to that within the volume profile. However, I know some guy who is just really good at making complex stuff, and his name is Mobius. Um, I've got access to Mobius's database. You guys think that my database is good? Mine looks like kindergartens playing in the sandbox eating their crayons compared to this guy's database, right? His is just absolutely amazing. I'll go through his database and see if we can find what you're looking for. I'm pretty confident we're not going to find one, but it wouldn't hurt to try, right? So I'll look. The reason I say that is because he has managed to come up with things using code in a way that I never even imagined could be done, right? Like the weekly expected move, he made that. And the reason that's such a surprise is the weekly expected move uses this data. And yet you can't get to that data using Thinkorswim code. So how did he manage to do that? By the way, still don't understand how he did it to this day. But he did it. But you can't code anything that asks, "Hey, what's that number here?" So like how the heck did he get it? I don't know. So maybe he has it. It is worth considering though, if you're looking at a volume profile and you have this number here for an example, right? There's 763,533. Do I need that thing to show me buys versus sells when price rejected off of there both times and fell? Now, we would have more granularity. We would understand what's happening better if it did show me, right? That would give us more information than what we have currently. absolutely true. What I could do is go into a smaller time frame and I could evaluate what that volume looked like when we were there. We can also do things like not on Thinkorswim, I don't believe, but you can do a drawing of a volume profile on things like TradingView, and you can tell it where to start the profile and where to end it. So that if you want a single candle, you can do that. And you can do single candle profiles on Thinkorswim so that every one of these candles has its own volume profile for each bar. So you would know where the point of control was for each bar. It still wouldn't say it was buys or if it was sells, but again, you would have more information. Neptune, huh? The guys that were talking today, I can't remember if it was Neptune or not. They were sounding like they are the only company out there, other than the government itself, when it comes to flood insurance. And of course, with the government being shut down, they are the only company out there. And I don't know, it IPO'd today, whatever the company was. I was driving, so I wasn't paying too much attention to, I wasn't like taking notes or anything. They were quick to point out that they're using AI, though. It was Neptune. Neptune, I didn't want to say it was Neptune because I was like, you just said Neptune, so I don't want to say Neptune, but it was. It was Neptune. They IPO'd today at $20. Yeah, yeah, check it out. They interviewed the guy on Bloomberg when I was driving, so I was listening to them, asking the guy some questions. They gave him some real lazy layup type of questions, and he did okay. I it was fine. So yeah, it was Neptune. Good call on that one. Yeah, one of the questions they asked was, "Well, who's your client? Like, is the average homeowner your client, or is it?" And they were laying it out really good. I think they explained it well. I'm not interested in running out and grabbing a hold of it. Bloomberg was, uh, Bloomberg did a good job pointing out that there's been a lot of insurance IPOs that came out this year. And one of the questions they asked that guy is, why do you think we're getting so many insurance IPOs this year? And the simple answer is that API made it easier to understand. Because I've always argued that a lot of those people really barely understand the crap they're trying to sell me. Sad but true. If they don't understand it, how can they talk me into buying it? And we all know that's true. You can't convince somebody if you aren't convinced. And how can you be convinced if you don't know what the hell you're talking about? So I think AI has made complex things easier to understand, or it can dumb down. I hate using that word, but I don't have a better one. They can dumb it down for us, and I put me in that category. Dumb it down so I can understand it. You know, me. So we found one of those Schwabs, but I bet they've got like four, and this is only one of them. Okay, that's the second one. I already knew about that one. That was James. We'll see when it pops back up. No, that's not James. Never mind. That's not. No, I, I don't know that guy's name. That's Cameron. That's Connie. So here she's doing a brand new trading journal using Excel. I told you guys, they come up with some good videos, especially if you're new to trading. Check out their YouTube channel. They do investors, they do swing trading, they do technical analysis classes, coaching classes, all sorts of indicator classes, all sorts of stuff. Um, I watched a couple of her videos where we used Thinkorswim and we taught it to look for new candle patterns that it didn't know. That was really cool because I got the Cahold patterns from her. She built them, and that's just neat. And then Barbara's the old lady. She's kind of young compared to Barbara, but they're good. There she is. There's Barbara. the, these reaction videos of people getting their butt handed to them. It's not funny. There's James. So I didn't find their other. I guess there's just those two, and of course they've got the television one, right? The Schwab Network. The entire technical analysis playlist, 26 videos right there.
The term technical.
Come on. You know what I mean? Like you can listen to that while cooking dinner. And I get it. A while back, someone said, I don't need that stuff. I've been trading. I've been in trading for over a year. Look, guys, when I started, I didn't learn candles. I didn't learn technical analysis. You know what I mean? I didn't learn trend lines I didn't learn any of that stuff. I learned options. That was the very first thing that I learned. Options. So after trading for over a year and a half, almost 2 years, I decided it was time to start learning about things like candles, analysis, candle patterns, indicators. But I was already a trader for almost 2 years. You know how silly it is to go watch a video that says, this is a candle, that's the wick, this is the body. I'm like, come on, man, I already know this stuff. But you still had to sit and watch that because it has to start somewhere, right? And then it gets more in depth along the way, and it finally starts getting into things that you didn't already know. So I get it. You might be looking at some of that stuff saying, I don't need that. I already know. How much of it do you already know? Right? Because I can guarantee you, I don't know it all. I've been doing it for a while and I still don't know it all. That was a really nice run today. Look at the tool that we normally look at. The weighted AD, it's greater than 250. If you're running the not weighted AD, it would be a different number, but um, on the weighted one, it's greater than 250. It did top out though, even though price didn't. Let's back up. Well, yeah, it did. Look, price topped out too. That was the high of the day, and we quit going higher, and that was the high of the weighted AD. And then we had a little divergence. The AD got a little bit higher, but price didn't, and we've been fading off since then. As long as this is positive, I don't want to look for shorts. And when this tops out less than 250, then I look for the market to top out for a little bit. So we topped out there, which was here. And then we faded back and ran and broke out again. But by then, price had already broke out. Price broke out on this reversal way down here. But that's one piece. If this is positive, and definitely if it's trying to grow and increase and it's getting higher and stronger, then we don't want to try to short the market. So all these reversals, we wouldn't have wanted to try to go short to run it back to the low of the day because this was saying we ain't going that direction. And then look at the ticks. We were mostly in the green the whole time. Sure, we came down into the red on these pullbacks, but we weren't getting into like minus 700, minus 1,000. The worst one was right here, and we barely got to minus 5. So the ticks were strong, stayed mostly in the green, really good positive hits too, plus 700 multiple times. That was telling us don't short this market. It wouldn't work out that good. I like looking at this thing, especially on days like this, to help me try to figure out, are we going to keep doing what we're doing or are we looking for a reversal? And if there's no info in there that is helpful, then that's okay. At least I want to try to see if there's something useful. By the way, this weighted AD has nothing in it from the tick. It's not tick in any way, shape, or form. It's not even looking at indexes. It's looking at the ETFs for the SPDRS, the spiders, right? So if we was to open the code up and look at it, it's looking at XLF, XLK, XLP, right? It's not looking at the indexes at all. And I would argue that the guy that made it should never have in any way referenced the advanced decline because it just confuses the heck out of people. The advanced decline is the advancing minus the declining ratio, and it is an index product like the advanced decline of the S&P or the advanced decline of the Nasdaq. Calling that thing anything to do with the weighted AD or anything to do with the advanced decline is misleading and wrong. But when you make an indicator, you can call it whatever you want, you know. So he gets to call it the weighted AD. This is like forced buying, grind higher. We had yields backing off, and we had the dollar fading nice and easy, nothing extreme here. And that's exactly what we want, right? Just nice and easy, nothing extreme. And that gave us the backdrop so that if we had something giving us some fire, these weren't going to fight us. But these didn't cause the push. So we did get some trades on in that paper account. And on Friday, we're probably going to try to roll like Google or Meta or one of those others. We're not going to roll the Intel trade yet. I want plenty of examples where we already did roll things so that everybody knows exactly what we're looking at when we do the Intel roll. The one that I have on Tasty, if things continue to go well, I'll probably end up rolling this one again later. And here's something interesting, and I wanted to share this. Look at what it says my trade is right now on Intel. And I get it, it might be hard to see. So I'm going to take a picture so that you guys can see it. Now, remember, I rolled this and I have a credit of $250 guaranteed, no lose trade, $250. But look at what it says my trade price is for this trade if I look at this screen. It says that I paid $3.17 for that call. And you do not see anything in here that says I got 250 in credit or that this trade can't lose, right? There is nothing in here that implies that at all. But if I pop this sidebar out and we look at what it says on my Intel trade, it's completely different. Now we can see my original $1.50, the $4 that was given to me in the roll, and my new average trade price of plus 250 in credit. And that right now, this trade is trading for $3.52. So right now, if I was to close it, it would be profitable $600. 350 plus 250 is $600. It's kind of nice, right? So if we had caught it before the end of the day, I could have tried to come in and priced a roll to look at what that would look like, right? But we want to see it on IBKR and Thinkorswim and Schwab and all of them, right? All of the different brokers. You have to do this if you're ever going to want to roll. You just got to go in and do it. Now, the question on the volume profile showing the buy order, um, even really good visual platforms like TradingView, which I think is a really good visual platform, even they have some form of a delta profile, right? Which is nice. I mean, they've got all kinds of profiles in here. So you can get, buy versus sell, um, delta, all kinds. But Thinkorswim, I'm gonna look. I promise I will look, but don't hold your breath on it. You probably are going to have to buy something like Jigsaw or Bookmap. I use Jigsaw, and it is a very complex tool. It's not cheap, but it's really cool, right? It gets the job done. Thing is, I don't need it all the time. Like I use it when I need to use it, and then otherwise I don't use it. I know traders though that will use those tools all day, every day, nonstop. Every single thing they do, they use those tools. That's not no, it's not for me. Well, guys, we made it to the end of it. Um, if y'all have questions or you have topics that you want to catch up on, anything in particular you want to do, as always, hit me up. We'll cover them in the live stream. If we don't have topics for Friday, I've always got something anyways. I think we'll take a look at the market backdrop and maybe see if we can find a couple of mechanical trades to put on because at least with those, it doesn't matter, right? It doesn't matter what the backdrop is. The mechanicals run anyways. They always run anyways. So we'll see what we get. All right, everybody. Have a good one.